Good evening. This is Doc Severson for the Theo Night Report for Thursday, November 2nd. Here is an intraday chart of Apple, and you can see that Apple started or ended the day actually at about 168.11 after going sideways the past few days, and at 4:30 tonight Eastern Time the earnings came out and we're up several points at this point, so about 6 points right now as we speak. So where is that in relation to their expected move? Well, if we look at tomorrow's option chain, so 3 November options, we can see that the expected move is about 6.9 points. So the upper end of the expected move is about 175. So 175 up here with the current price, where the ending price at the closing bell was 168. And the bottom end of the range is about 161. So 161 down here, 175. Obviously, we're near, very close to the upper end of that expected move for tomorrow. Now let's zoom out and take a larger look at Apple. So what I'm seeing here is that Apple goes through the same type of pattern every time, is that we get into these parabolic moves with Apple and then it corrects pretty strongly to the downside. But it still keeps the polarity. It still keeps that higher low in the monthly chart. And then we start off the next big move up here. And then it corrects very strongly again to the downside. And then here comes the next move here. So what do you think I'm going to say with this one? Well, every time we've gone through this, we've been down around the same energy level. In fact, this one is even deeper in terms of the linearity of this move. The thinking being that range expansion like this leads to range contraction. So looking for some type of exhaustion move here with Apple. What it tells me though is that on the daily chart, perhaps we'll have Apple flagpole out here at 75 and maybe consolidate for a while. But I don't see any real loss of energy here at the weekly chart. So it may continue for just a few weeks yet before we start to see that weakness come into Apple. But it may not be long before we have our first $1 trillion market cap equity. Now, what I'm seeing in the markets reminds me a lot of what I saw back in 1999 to 2000, as well as what I saw in 2007. This is where we get into kind of the runaway market or fear of missing out. Some people are calling this the FOMO market right now. So this is where we get markets that are literally going completely vertical. So we have almost an infinite slope setting up here now on the Dow particularly. So the Dow is probably more so than any other index right now, being the recipient of people just throwing money at it. Because we're getting into this area here, and look at this today, just 18 advancing issues, 12 declining, but the advancing issues are mostly up at least 1%. Most of these are up 1%. So there's a lot of money being thrown at this. Studies have shown that actually the pain experienced by being on the sideline of a market like this, which is continuing to head north without being invested, is actually much greater than if you actually had taken a stop loss on a normal position. It's kind of amazing if you think about it, that the pain can be that much where you just completely lose your discipline and can't stand it anymore. You hold your nose, you jump on board a market like this. And we're seeing not only retail traders, but plenty of professionals as well too, because the only way you're going to get any alpha in today's market is going to be just chasing these momentum stocks. So this game of musical chairs will continue until some kind of exogenous event comes in from the outside to kind of spoil the party. So how do you trade a parabolic market like this? Do you just chase after stocks like Boeing here? Or do you just chase after Apple? Do you chase after McDonald's? Well, I think at this point, the answer is no. So regardless of the fact that that's what some institutions and some retail traders are doing, it's become very in vogue to just chase after momentum stocks, regardless of their level of exhaustion. We all know how this ends up. This is not going to be any different this time just because we have a different monetary policy from central banks. Eventually this will normalize as well too, and those that chase at the top are going to be the bag holders. So how can you participate in a market like this? Well, there's still plenty of stocks that are consolidating and waiting for their turn as well too. So we have a number of scans that are looking for charts that are just coiling in a range, building up energy, building up power, looking for their chance to be rotated into as well. So stocks like Coke is one of them in the Dow, which is just sitting there coiling away. At some point, this will break as well too. We have Best Buy sitting with another signal like this, just coiling in a range, just biding its time, waiting for the rotation. Las Vegas Sands is another one as well too, as is Western Digital. This is a great signal right now. This is actually not a signal for an entry, but this is a very strong pattern. And we're already past earnings on Western Digital. And then lastly, here's Tiffany's as well too, which is showing a lot of power in this setup. So these are the types of setups that we see strong breakouts from. And looking for multiple time frames to show a confluence of energy is what we're looking for in these types of trades. That is it for tonight's update. Thanks for listening. We'll see you this weekend. Take care.